This video is created by Jagrat Creations. It is useful to the students who are reading for CA-IPCC, or you can say intermediate CA-IPC. This video is also useful to the students who are reading for BCom corporate accounting. It is also useful to the other professional courses like CS and even ICWA, who has this capital reduction or internal reconstruction. This chapter is a part of their syllabus. So this is a topic in corporate accounting. I want to solve one sum here before you. Just observe the sum on the screen. You can pause the video and read the whole sum, but let me start. The balance sheet of Zakir Limited stood as on 31/3/2016. On the asset side, you are given goodwill, patent, land and building, plant and machinery, stock, debtors, bills receivable, cash, bank balance, preliminary expenses, profit and loss account, advertisement, suspense account. On liability side, you are given equity share capital, preference share capital, debentures, creditors, accrued interest on debentures. Court sanctioned a scheme regarding the reduction of capital with the following conditions. Now, what is this capital reduction? You know very well that in case of sole proprietorship, if loss occurs in any year, it is deducted from capital, means it is written off against capital. Same way, if loss occurs in case of partnership firm, loss gets distributed between partners and that loss is deducted from the capital of the partners, or you can say that losses are written off against capital. Now the question arises, if this type of losses occur to a company in any particular year, can such loss be deducted from capital as you are used to with sole proprietorship and partnership? The answer to the question, no. You cannot write off annual loss against capital, against equity share capital. Why? By writing off losses in such fashion, either the face value per share declines or paid up value per share declines if the paid up value is other than the face value, or the number of shares may decline. Then who lost those number of shares? All those questions arises. So writing off of annual losses against capital is not permitted as you are used to do in case of sole proprietorship and partnership. Then do you mean to say that the losses can never be written off against capital? Yes, it can be written off against capital. Let it be accumulated for a certain number of years. If profit occurs in the second year, then the loss of first year may be wiped off. So, but if continuous losses occurs year after year, then one fine day, with the sanction of the court, you can write off all losses against capital. Now here notice that profit and loss account debit balance 1 lakh. This preliminary expenses 1,50,000 is not written off. That is also one type of loss. When the company is running into loss, how the company could have reputation? The goodwill is 1 lakh. The patent and trademarks are not that economically sound. So this is also a loss 1,50,000. So here if you look at the balance sheet, you will find the loss accumulated under various titles. And all those losses are required to be written off against capital by a process of law. That process is known as internal reconstruction or a capital reduction program undertaken by a company under the sanction of the court. Now here in this sum, just observe, Ordinary share is to be reduced to rupees 3. Share of 10 reduced to 3. Preference share is to be reduced to 60. Share of 100 reduced to 60. So every preference shareholder contributing 40 rupees capital to write off the losses. Every equity shareholder reduced by 60. So every preference shareholder is contributing 60 rupees and reduced to 3. So every shareholder is contributing 7 rupees per share to write off the losses. This is how the contributions are made by the equity shareholders and preference shareholders to write off the accumulated losses known as profit and loss account, including the expenses, etc. Invisible and fictitious assets are to be written off. Now, what are the invisible and fictitious assets? The invisible and fictitious assets are goodwill, patent, preliminary expenses, profit and loss account, advertisement, suspense account. All are to be written off against the contributions made by equity shareholders and preference shareholders. Over and above, land and building is depreciated by 50%. So though the value of land and building is 3 lakhs, its value has gone down by 50%. So 1,50,000 need be written off against the value of land and building. Same way, plant and machinery is to be reduced to rupees 2 lakhs. Plant and machinery 2,50,000. Reduced to rupees 2 lakhs. So 50,000 is the reduction. So where loss resides, where loss is situated, the loss is situated either in the form of fictitious and invisible assets. The loss is in the form of overvaluation of real assets. The loss is in the form of undervaluation of liabilities. So these are the various locations where accumulated loss resides in a balance sheet. And all those losses are to be written off by the sanction of the court. Stock is to be reduced by 30,000, 20,000 is to be written off as bad debts. Debenture holders agree to forego the accrued interest on debentures. So this liability is not payable, it's a gain. So all other losses are there, they are to be written off against the capital contributed by equity shareholders per share rupees 7 and by preference shareholders per share rupees 60. Now for the purpose of journalize the transaction for implementing the above scheme and prepare the new balance sheet. Thereafter, this is some adapted from university examination. Now see. So, I am going to prepare one capital reduction account or say reconstitution account wherein all losses to be written off, goodwill, patent, trademark, all these losses to be written off are debited to reconstruction account or capital reduction account. The decline in the value of assets will also be debited to capital reduction account. So all losses to be written off will be recorded to the debit side of capital reduction account. Now the capital foregone, capital contributed to write off the loss will be credited to capital reduction account. The debenture accrued interest not payable, liability not payable, it is also one type of gain. So it is also credited to capital reduction account. This is how all the losses to be written off will be debited to capital reduction account. All contributions made by the shareholders and all gains will be credited to capital reduction account. And the revised value of assets and liabilities will be reported in the balance sheet. So I am going to prepare one capital reduction account. I am going to prepare notes on accounts for the purpose of preparing balance sheet as per schedule 3. Let me start now. Here I am going to prepare capital reduction account. Here I am going to prepare notes on accounts. You know that the notes on accounts, the information is to be collected under this various titles: share capital, reserves and surplus, non-current liabilities, long-term current liabilities, trade payables, then non-current assets, tangible, current assets, inventories, trade receivables. These are the various titles in which I will collect the information, and that will be reported in the balance sheet as per schedule 3. Now, let me start. This is the information given to me in the sum. I'll take adjustment one by one. I'll show you the working note. I'm going to write down the journal entry and I'm going to report the effects of journal entry in this capital reduction account and in this notes on accounts. This is the balance sheet given to me. First transaction. Ordinary share is to be reduced to rupees 3. See, it's highlighted. This is the transaction that I'm going to consider. Share of 10 is reduced to 3. So let me prepare a working note. Every equity share is of rupees 10 each. It is reduced to rupees 3. So reduction made is 7. So per share reduction is 7. Per share contribution to write off the loss per share rupees 7. What are the number of shares? This 7 lakhs is reduced to a share capital of 3 each, so 2 lakh 10,000, and 7s are 49, 4 lakh 90,000 will be the contribution for capital reduction. So equity share capital account debit 7 lakhs. 2. 70,000 into 3. To equity share capital rupees 3 account credit 2 lakh 10,000. The amount foregone, amount contributed by them for meeting with the losses is credited to capital reduction account. So capital reduction account is credited with 4 lakh 90,000. If you want to write narration, as per the scheme approved by the court, equity share of rupees 10 each is reduced to rupees 3 each. This is how you can write narration. Now, this capital reduction account is to be credited 4 lakh 90,000 contribution made to meet with the losses. So capital reduction account is credited. The equity share capital account rupees 3 that I write in the notes on accounts. Here I should write authorized share capital issued and subscribed share capital, but just tolerate the limitations of my screen. Now this transaction is done, so I make a mark that this is done. Now next, preference share is to be reduced to rupees 60, reduced by rupees 60. So share of 100, reduction by 60, so reduced to 40. So value after reduction is 40 rupees. What are the number of shares? 5,000 shares. So on 5,000 shares, value left after reduction 40, 5,000 into 40, 2 lakhs. So now I want to write down the journal entry. Preference share capital account debit 5 lakhs. 2. Preference share capital rupees 40 each account credit 2 lakhs. To capital reduction 5,000 into 60, 3 lakhs is credited to capital. This is the journal entry. Being preference share of rupees 100 each reduced to preference share each of rupees 40. That's the narration. Now this preference share capital will appear in the share capital title in notes on accounts. Capital reduction account is credited with 3 lakhs. This is how the second information is taken care of. Now I proceed to the next. Invisible and fictitious assets are to be written off. These are the invisible and fictitious assets. They are identified on the screen. They have to be written off, so its value in the balance sheet now will be 0, nil. So it's a reduction in the value of asset. It's a loss. Capital reduction account debit. What amount that I will calculate later on? To goodwill account credit 1 lakh. To patents and trademark account credit 1,50,000. To preliminary expense account credit 1,50,000. To profit and loss account credit 1 lakh. To advertisement suspense account credit 40,000. So all this total will be debited to capital reduction account. Now, once again, land and building is to be depreciated by 50%. Value of land and building is 3 lakhs. Let me prepare a note for that. Reduction made is 50%, 1,50,000. So value after deduction, 1,50,000. So this 1,50,000 will be credited to land and building account, and capital reduction account will be debited because decline in the value of loss, all losses to be written off are debited to capital reduction account. So land and building account credit 1,50,000. And the remaining value of land and building will appear in my notes to accounts, land and building 1,50,000. This is how effects are to be given. Now next, plant and machinery is to be reduced to 2 lakhs. Its value is 2,50,000. Reduced to 2 lakhs. Reduction is 50. This is a loss that will be debited to capital reduction account. So capital reduction account debit to plant and machinery account. and the revalued value will appear in notes on accounts, non-current assets, plant and machinery, 2 lakhs. This 2 lakhs will appear here in tangible assets. Now next, stock is to be reduced by 30,000. Stock given to you, how much? 2 lakhs. Reduction therein, 30,000. Stock left thereafter, 1,70,000. 1,70,000 will appear in inventories, and 30,000 reduction will be debited to capital reduction. So capital reduction account debit to stock account credit 30,000, and 1,70,000 will appear in notes on accounts to inventories. 20,000 is to be written off as bad debts. Debtors are 1,20,000. Reduction is 20,000 bad debts. Bad debts will be credited to debtors account. The debtors left thereafter 1 lakh. That will appear in the trade receivables. And this reduction, capital reduction account debit to debtors account credit, 1 lakh will appear in trade receivables. So this 6 point is over. Now debenture holders agree to forego the interest. So this is a gain that will be credited to capital reduction. So let me have a total of all these things. So total of all these items, 1 lakh plus 1,50,000 plus 1,50,000 plus 1 lakh plus 40 plus 150, 50, 30, 20. That total will be how much? 7,90,000. So capital reduction account is to be debited with 7,90,000. Okay. So capital reduction account debit to goodwill, to patent and trademark, to preliminary expenses, to profit and loss account, to advertisement suspense account 40,000, to land and building 1,50,000, to machinery 50,000, to stock 30,000, to debtors 20,000. This is how all the losses to be written off debited to capital reduction account. This is the contribution there against. Now this liability 15,000 not payable, that will be credited to capital reduction account. So 7th point, interest accrued on debentures account debit to capital reduction account credit. So capital reduction account is credited for that. Now all these adjustments are taken care of. So all these details I have considered. What are the items left in the balance sheet to be maintained as it is in these notes on accounts? They are: copy the remaining balances, 5% debentures long-term loans, creditors trade payables, bills receivable, trade receivables, cash and cash equivalent, cash and bank balance. This is how the remaining information will be recorded in notes on accounts at the same value as it existed before. Now I'll close capital reduction account, total of credit side minus total of debit. This is the excess contribution over the losses to be written off that will be credited to capital reserve. So amount to be credited to capital reserve account is 15,000. So 8,05,000 minus all these losses to be written off. So let me write down the journal entry for that. Capital reduction account debit to capital reserve account credit 15,000. And that capital reserve will appear in reserves and surplus. This is how all the capital reduction account is prepared. All journal entries I have recorded. I'll demonstrate all the journal entries at one place at the end. Now I want to prepare the balance sheet as reduced. These are the titles in which the information need to be reported. You know this title very well. Equity share, rupees 3 each. You should write here authorized share capital, issued capital, subscribed capital. All these things you need to write. Preference share capital, share of rupees 40 each. Reserves and surplus capital is of 15,000. Long-term borrowings will have debentures. Trade payables will have creditors. Non-current assets, tangible assets, land and building and plant and machinery. Inventories, stock will be there. Debtors and bills receivable in trade receivables, cash and bank. Total of equity and liability, total of assets. This total should agree. This is how the balance sheet is prepared. Now I want to demonstrate the journal entries that I have recorded while solving the sum. Just observe them. These are the journal entries that we have recorded while solving the sum. This is the initial basic sum that I have made an attempt to explain you. So capital reduction is a process wherein accumulated losses of the company gets written off against capital contributed by the shareholders as per the scheme sanctioned by the court. I feel that you have followed all these concepts. Thanks to all of you.